Chicken Genius, the famous investment YouTuber, recently bought Tesla shares. To the surprise of many, the Tesla investor, who has for a long time given reasons why Tesla may not continue to record increased demand for its car and why the company's stock will likely experience more dips, could finally be seeing positive potentials for Tesla. It seems rather surprising to see the stock investor buying more Tesla shares, especially during these uncertain periods in the stock market. What could possibly be his reason for doing so? Well, lucky for you, you're just about to find out in this video. You definitely don't want to miss this one. Hello everyone, and welcome back to Tesla Tomorrow. Popular YouTuber and huge fan of the stock market, Chicken Genius Singapore, recently bought around $300,000 worth of Tesla shares. This comes after the car company's stock plunged to its lowest price in 2 years, with several investors selling off their shares. After announcing that he had bought some Tesla shares, Chicken Genius tweeted the major reasons why he had bought Tesla shares. According to him, he had been called out several times about his new purchase of Tesla shares. And following this, he has had to clarify on why he bought Tesla shares, which is currently seen as undervalued in the stock market. Here are some reasons he cited. Are you ready? But before we start, if you like this type of content, make sure to hit that like button, subscribe to our channel, and turn on notifications to stay up to date on everything happening with Tesla. In his tweet, Chicken Genius cited a few reasons why he bought the stock, stating that nothing has changed except that more people are now focused on Elon Musk, and a significant number is starting to ask for the board of directors he replaced. Following Musk's Twitter deal, there has been a lot of tension in Tesla's stock performance, and many investors think that this may not end well for the car company. Several investors have called out the Tesla executive, requesting a new CEO for Twitter so Elon Musk can focus on driving Tesla to autonomous driving. There are also demands that Musk could step down as Tesla's CEO, as the workload may be getting too much for him. Even Musk himself has also admitted to an increased workload, adding that he is now working 24/7 to get his new company on track to earn massively. The Tesla CEO shared this in a virtual interview at the G20 summit in Indonesia, where he talked about how his workload has changed since his $44 billion acquisition of Twitter. According to Musk, he is now working extra time, morning to night, and 7 days a week. He said in the interview that running Tesla's global operations is becoming a great difficulty, adding that the amount that he tortures himself is on a next level. It is important to note that Chicken Genius has had quite a number of things to say about Tesla. In one of his videos, he stated how an economic downturn could have a significant effect on Tesla's demand in the future. According to him, the automobile industry is one of the first to be affected during times of economic struggles, as people may not be buying cars since many cannot afford the luxury of buying cars, talk more of an electric vehicle. Chicken Genius believes that Tesla is facing serious demand destruction, especially in its Chinese market where competition is very high. He said that Tesla's backlog is shrinking in its location, judging by the reduction in wait times for the car. As the Chinese car market has grown, Tesla has pushed itself to meet demand in the world's biggest car market. The car company recently cut prices on the Tesla Model 3 and Model Y sold in China, while also moving Tesla stores away from the expensive city centers and into more rural or suburban areas where service stations can be included. Tesla reduced delivery times in China to as little as a week. Wait times in the US are also relatively short for Model 3, although the Model 3 performance remains unavailable until next year, and wait times are also significantly longer in Europe. Likewise, Chicken Genius stated in July that Tesla will experience a drop in delivery during the second quarter of this year. He majorly attributed this to the effect of inflation, which will likely cause car production and delivery to slow down. And indeed, Tesla reported that its profitability was negatively affected by higher costs associated with raw materials, commodities, and logistics, and by the prolonged shutdown of the company's facilities in Shanghai due to restrictions resulting from the pandemic. Production units in and around Shanghai were closed temporarily due to strict lockdown measures. As a result, Tesla sold only 89,000 cars across China during Q2 2022. This comes right after achieving phenomenal growth in Q1 2022. Tesla's global sales during Q2 2022 grew by just 27% year-over-year to over 254,000 units, falling short of expectations. In quarter-over-quarter also, Tesla's sales fell 18%. However, while Tesla was affected by inflation just as Chicken Genius has predicted, the automaker did record significant production during this quarter. Tesla reported adjusted earnings of $2.27 per share on $16.93 billion in revenue in Q2 2022. Adjusted earnings per share or EPS solidly beat estimates, rising 56.6% compared with the same quarter last year. And revenue matched analyst forecast, rising 41.6% year-over-year. According to Tesla, its revenue growth during this quarter was driven by increases in vehicle deliveries and average selling price, as well as growth in other parts of the business. Likewise, the reduction in Tesla's wait time may be a sign of increasing demand instead of a decline. According to a recent report, as Tesla's Gigafactory in Shanghai produces at a higher rate than ever, Tesla's delivery times have also been slashed. And in the same way, with continuous ramp in the facilities in Texas and Berlin, consumers in their respective continents may see a continued reduction in wait times. The foremost factor that comes to mind when gauging Tesla's ability to cut wait times is production volume. The higher the production, the lower the wait time. Hence, Tesla's wait time cut in China is likely a good indicator that production continues to ramp upwards. Although it isn't clear if this added production from China will affect wait times in the other parts of the world. What do you think about this? Let us know in the comments section below. For customers looking at other electric vehicles, legacy automakers have also struggled with the wait times for their new electric vehicles. Ford has continually increased production numbers for the hot new Ford F-150 Lightning. Hyundai and Kia are still years away from opening its US-based EV manufacturing facility, preventing them from quickly meeting customer demands for their EVs. No doubt, Chicken Genius has had a lot to say about Tesla and has previously given the bears a number of points to work on. However, he still sees a good future ahead for Tesla. Why else would he buy so much Tesla shares at this critical moment? Chicken Genius believes that Tesla will have an incredible Q4, and there are several reasons why this could happen. At Tesla's 2022 annual meeting of stockholders in August, Musk projected that the company aimed to hit a production run rate of 2 million vehicles per year by the end of 2022, and would continue building factories to meet those production goals. Likewise, Tesla has said it intends to continue to accentuate its battery development, among other projects, to solidify its corporate plan and mission. According to the automaker, the long-term success of this business is dependent upon increasing margins through greater volumes. Tesla's Q4 forecast also includes an ambitious target to produce almost 495,000 Model Y and Model 3s, the automaker's two models that account for about 95% of Tesla's output, as well as the ramp-up of its newer, expansive, and expensive factories in Germany and Texas. The car company plans to push global production of its top-selling Model Y and Model 3 electric vehicles sharply higher in the fourth quarter and build on that growth in 2023 with a ramp-up in its newer factories. A part of Tesla's optimism is rooted in the fact that it has risen to number one in the auto industry in terms of operating margin. The car company makes more profit on its cars than any other car company in the world. The automaker recently proved this after it made 8 times more profit than Toyota in the third quarter. While it is good to look on the bright side of Chicken Genius's purchase of Tesla shares, it is important to note that it makes up only about 5% of the stock portfolio, and so that may not be a very strong bullish move by the stock investor. What are your thoughts about this new purchase? Let us know in the comments section. And don't forget to tell us what your valuation on Tesla is. If you would like to know what Tesla has been up to these past few days, go ahead and click on the next video on your screen. See you there!